Hi, welcome everyone. In this video, we are going to talk about another time series test that EViews 14 has provided us. This test is about checking if there is a bubble in the data. So, what is meant by bubble? That there is a sharp increase in the data, specifically in the stock markets, with the expectation that it is not naturally increasing and it will going to fall down. So for that, what's the test is about? The test to check this is they use unit to test where we check that if the mean value has changed. Since we are talking about increase, so it's only right-tailed augmented decay Fuller test, which is a unit to test. And since the data is increasing, so it will be a rolling window augmented decay Fuller test to check if there is a bubble or speculative bubble in the data. So first of all, I will use this data. This is the log of economic globalization and this is the log of oil prices. We'll start with have a look at the data first. So I will show you the economic globalization data. So it has a just smooth increase and a smooth decrease. And if you look at the graph of oil prices, and you see that there's a dip and there's an increase and the sharp dip and then sharp dip and not there here there are dips but they are not that sharp or that big. So first of all we look at the time series test on bubble here. So if I apply this test you will notice that it has pointed out that in 2004 there was a bubble but it is insignificant, and the test is lower than the critical values for all the times. And if you look at the graph again, so we'll notice that something might have been happened in 2004. So somewhere here there was a decrease, but it is not that big to point out that there is a speculative bubble. So this is one side. And if we look at the oil prices, and if we go and check for time series diagnostics and then for bubble test, you can notice that it is significant and something has happened in 2008. So it has jumped beyond the critical value, different from zero. So in the previous case, if I open it up again, the bubble test and see the graph here, so you can notice that the test values are not high enough to go beyond the critical values. That's why they are considered as zero because it's only a right tail test. So there is a no lower critical values or confidence interval. So here it is significantly above. So it is saying that in this test, there is a significant bubble in 2008. So if you go in the graph, line chart of this data, so if you look at 2008, so there was a sharp increase and then a sharp decline. So there was a bubble somewhere here. So this is a way you can check for a speculative bubble in the data. So this test is very handy for the case if you are doing a time series analysis on a stock price or exchange rate data, or a long or a dead time series data, any type. So I hope you understood the test. It's a rolling window ADF test to check for a speculative bubble in the data. So thank you very much. Bye.